Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro just a shade bit weaker this morning, and the dollar CAD is continuing to move a little bit lower. We did have some election results in Canada. Bear with me. And cable continues to hold close to this pivot, which is 29.80. Looking across, we're seeing gold just a little bit stronger, and crude oil is just holding close to levels it was where it closed at on Monday afternoon. Coming into today, we do have Canadian retail sales as well as Mexican jobless rate. And into the States, we'll have existing home sales at 10 a.m. Eastern, along with Richmond Fed. Some very minor UK data at the bottom of the hour. So let's go and take a look at what happened overnight. Australian and New Zealand dollars extend rally near major resistance. The Australian and New Zealand dollars extended a week-long rally on Tuesday as optimism for progress on Sino-US trade talks and the Brexit standoff squeeze short positions and push bond yields higher. The Aussie dollar reached a 5-week top of 66.83, though bulls need to break major resistance at the September peak of 68.95 to build on the run. The Kiwi was much of the same position, having climbed to the highest in more than 5 weeks, 64.35, nearing the September top of 64.50. Positive mood music on the U.S.-China trade developments is keeping the risk fires burning. The S&P 500 closed back above 3,000 for the first time since September 19th, and bond yields higher across the globe. Said Ray Trill. China and U.S. have achieved some progress in their trade talks. Vice Foreign Minister Li Yuqing said on Tuesday, adding that as long as both sides respected each other, no problem could not be resolved. President Trump also sounded upbeat on China deal on Monday, while White House advisor Larry Kudlow said tariffs on Chinese goods scheduled for December could be withdrawn if talks go well. On Brexit, investors are wagering PM Johnson's repeated failures to get his deal through Parliament means that there's a risk of a hard exit, or less of a risk of a hard exit, all of which has seen the safe haven bonds cede some of this year's huge gains. Yields on Australian paper were up 1.18%. After being as low as 0.87 just 8 sessions ago. There was also was no economic data due out, but dairy export farmers lifted the 2019-20 guidance range for the range of pays farmers for milk, saying it has managed to achieve firm prices so far this year. And the Canadian dollar holds near a 3-month high if the Trudeau election win. The Canadian dollar held near a 3-month high on Tuesday as the market took it in stride the prospect of a re-elected Liberal government, although some investors worried about the Liberals' need to rely on a left-leaning opposition party for support. Canadian Prime Minister Justin Trudeau's Liberals are set to form a minority government after a tight election on Monday, with the latest tally from the Elections Canada showing Liberals had won or were leading 155 of the 338 seats. A minority government leaves Trudeau in a weakened position and needing the support of a party, such as the New Democrats, to push through key pieces of legislation. This is likely to exert drag on the Canadian dollar that might otherwise ride solid economic data, favorable interest rate differentials, and improving risk appetite, said Carl Shimoda. The Canadian dollar is trading nearly unchanged at 30.82 to the U.S. dollar, the currency which was boasted on Monday by signs of progress towards the resolution of the trade dispute between the U.S. and China, and notched its strongest intraday data level since July 22nd. The loonie has been the top performing G10 currency this year, up more than 4% against the greenback. The NDP said it would increase the corporate income tax rates and implement a wealth tax. It also has indicated the opposition to the expansion of a flagship oil pipeline, Trans Mountain. I expect limited stock market reaction on this outcome. Energy stocks won't get any relief bounce on any news and should see a further deterioration in sentiment towards the space. The energy sector has the second largest weighting on Toronto's benchmark stock index. And let's see here, no news there. Let's go and move on to the morning bid. World stock markets have once again latched onto the optimism that the two big deals dominating sentiment all year, the U.S.-China trade war and Brexit, will turn out all right, or at least not as bad as many had feared. Early indications suggest S&P 500 companies might dodge a first annual aggregate profits contraction since 2016 for the third quarter in a row. Halliburton climbed more than 6% after its third quarter on end. I'm not going to go into those details. Encouraging words from Washington and Beijing on the prospects of some trade truce between the world's two biggest economies helped, especially while advisor Larry Kudlow's comment that progress ahead of next month's APEC summit could stop fresh U.S. tariffs to Chinese goods going ahead in December. UK markets continue to see the latest developments in the Brexit saga as positive on balance. Fears the UK will crash out of the European Union until at the end of the month are now considered unlikely, and Parliament has insisted PM Boris Johnson passed all relevant legislation necessary for his deal before giving it a final vote. He's expected to struggle to get that done in time. Only 9 business days are left before the Halloween deadline, so the EU will probably have to agree to his formal request for another extension. Tuesday sees a vote on the timetable for that process, so if Johnson were to lose, that could scupper the deal once again. We see a deal, a long delay, and possible election in the interim. I don't know how long they're going to keep dragging this Brexit thing out. It's just, God, everybody's tired of it. Even though Japanese stock markets were closed for a holiday overnight, other Asian markets gained overnight. European and U.S. stock futures were flat. Benchmark sovereign yields continue to rise, with 10-year yields reaching their highest in almost a month as the yield curve between the 3-month and 10-year moved back into positive territory. Already at 3-month highs, Canadian dollar gained as parliamentary elections results showed PM Justin Trudeau to return to power, but with a minority government. In emerging markets, attention turned to Lebanese assets. We're going to go there. So there we go. So let's go on and move into the analysis. So, saying after a strong prior week's finish, the euro has taken a pause, holding at the 11.50 area. Bunds have slipped to new lows, but have held in a value area. Support for the euro is 11.21, with the upside at 11.91. Actually, we're seeing the bunds a little bit stronger this morning, which will reduce the yield, albeit not as much as considering how much everything's fallen, but so it could provide a little bit of weakness here for the euro. So we're gonna, I believe that's going to remain the same here on the euro. Yeah, 11.21, 11.92. I think I mentioned 11.91, so 11.92, that's fine. This is going to remain the same, so we're just kind of taking a pause here. The bunds being a bit weaker. Now they're stronger in price, but a bit weaker. And we'll go and take a look at that quickly too. point that out. So you can see here with the bunds, we talked about this yesterday. So we've fallen off like off a cliff here. You can see here, but we are into a value zone. So we made new lows yesterday, but held, and we're working a little bit higher now. So it's this fall in bunds, which is an increase in rates, as it's an inverse relationship that has helped the euro. I mean, really actually has directed the euro. So we'll move back into the main screen. So you need to be cognizant of that. My thought was if we did, if the bunds did go back to dip again, and we saw a rally, I thought that'd be an opportune time to exit some longs. We'll see what happens. We're just stalling for now. Let's go and move into the cable. Bear with me. So it said cable finished Monday with a medium-legged doji, but not far from the prior major pivot of 2980. Resistance remains at 3050, confluence with 3078, and support is now 2872. So as I mentioned, we're right here at this pivot, this huge pivot. 2980 has been around for a very, very long time. You can see here. So we've made a couple of stabs there, but we have not been able to close. And that'd be huge if we did. But we have resistance at 3050 and 3078. So when we're looking at the cable, yesterday probably was a day for pause because pretty much no change except that on the bias chart support, that moves up to 2872. And on to the Aussie. Aussie continued higher on Monday. Resistance is 68.81. You can see here, we came up short, right? Made that run up there, and we challenged it, got above it, but we're pulling back. The close above opens an opportunity to 69.44 up here. Support is now the old key resistance, which is 68.09. So 68.81 is our resistance. If we can get this close, a daily close above 68.81, that'll open the challenge here for 69.44. But we're struggling a little bit here at resistance. We've had a nice little run up in here after very quiet trading for some time. Okay, and let's go and move into the Kiwi. Kiwi closed above major level 63.89, is now open to challenge 65. Immediate resistance is 64.36 with support at 63.56. Well, you can see that's where they stopped right on a dime so far, 64.36. Go and move this here. We go at 64.36. And we're actually going to go on and change this to bullish for the Aussie on a very short term. And the same thing here with the Kiwi. And support moves up to 63.56. But we're just bumping up right up here against this resistance with the potential move up here to 65. That'd be, if we can get that, we'll certainly have that opportunity to jump up and challenge 65. The actual level is 93, but once again, it's going to be 65 that they're looking at. Looking at the Canadian dollar, well, Trudeau won, and we had our bias chart support for 30.90. Says the dollar CAD reached 31 with bias chart support at 30.89. The market has a potential to 30.43, but short covering to 31.66 is possible, and resistance is 31.36. Well, there's that 30.90 we're looking at. Actually had listed as 30.90. And we're right there. We're holding. We've taken a little bit of a slight dip below, but there's a potential for some short covering. And here's that initial resistance is going to be 31.36. You can see here with confluence with the trend line and also this level here at 30.89. And this is going to remain the same here at 30.90, which is going to hold this right here. The low is what? 30.70, 30.70. Let me take a look here on a 2-hour chart. Well, you can see where they're trying to make a stand there at 30.81, called 30.80. So let's move this down to 30.80. But we are pretty oversold at this point, and a bounce would be reasonable at this point. Look how much would come off here. It's going to move in now to the peso. The dollar peso remains under pressure with another successive close below the breakout pivot of 1923.6. Support is 1908 followed by 1902, and resistance is the pivot right here. So, you know, I mean, the longer we stay here, just, you know, yeah, they're kind of holding the lows, but they're not doing anything with it. Look how far we've fallen, and we just simply cannot bounce whatsoever. I mentioned this in the chat room. I posted the chart too, is we're not able to get above this. You know, on Friday, we were looking at that. You can see that, let's see if we can pull this out a little bit further. This right shoulder right here of this potential inverted head and shoulder. And I mentioned, I go, you know, that's the resistance right there. I mentioned at the time when we come in the morning, I go, 1916. I go, there's your resistance. Unless you can get a close above 1916, the right shoulder, it doesn't even matter about all this other stuff. I mean, you, like the saying goes, you got to walk before you can crawl, or I mean, you got to crawl before you can walk and walk before you can run. I mean, there's nothing bullish about this thing in any respect whatsoever. The only thing you can hang your hat on is it hasn't gone to new lows. That's the only difference, only thing. So we have to get above that for starters. if we're able to get above it, I mean, the resistance would come in at that pivot if we can see some short covering. But I mean, here, and we were talking about on, I think it was Thursday or Friday last week, about it needing to get above the 1920. Couldn't even get that. I said, hey, look, if we can get above this, we have this potential inverted head and shoulders, but we needed to get above here and get a close of 1920. We could have seen some short covering. It just has not come to fruition. Now we've stayed below this, and you can see these stabs, these multiple stabs up here. We can't even get a close above 1916. So I don't see anything bullish about this. Could you see some short cover? Maybe, but right now support is 1908 followed by 1902. We've had that in place. In 1923, the pivot is the resistance now. So let's go move into the dollar yen. Dollar yen remains a bid, albeit hesitantly, as the SPOOs move above 3,000. Resistance is 888 with support at 839, followed by 812. I mean, even though the SPOOs are higher, I mean, they pull back a bit. We're at 3,001, but this market, you would think this could be a lot higher. It isn't, although it's holding its bid, but as I said, rather hesitantly, but the fact that we're above 3,000, but we're at 850. It's not like as if we're even pressing the upper ends of the eights. So resistance is, as I mentioned, is going to be 888. And we'll support at 839. And let's go move into the Dixie. The dollar index remains under pressure after finishing last week below major weekly level 97.89. 97 has provided support with additional at 96.80. Resistance is 96.65. Rallies are to be sold into the 97.89. So we do have resistance here at 96.65. And hang on. I meant to say that's 97.65. And support's going to be this 97.80. There is some additional support at 96.80. But I'm not going to mention at this point. We're holding above 38 ticks. So right now, not that we couldn't slide back, but the support comes at 97 even with the resistance at 97.65, and rallies should be sold into this 97.89. And let's go to move into the cross rates. Well, we are seeing the Kiwi and the Aussie struggling as they've reached these new highs, and we're seeing it right now against the yen. So you can see here we pressed almost right at 70 cents, which is pretty huge, and also 69.78 is the 50%. So looking in here, resistance is going to be 70 cents even. Hard to believe it's made all the way up there. We did have it at 69.75, so it moved up to 70 cents. It's actually gone to, looking at here. I mean, think it has gotten slightly bullish now. I mean, so overall you wouldn't consider bullish, but on a short-term basis, yeah, I guess with this close above here would constitute bullishness. And support. $68.85 on a pullback. Let's go and move on to the Euro Yen. And we're talking about the Euro potentially making a pause. So we are seeing a little bit of a stall here. We're going to go right there with 21.28 on the Euro Yen, 21.28. With support coming in, I think we have to realistically drop this a little bit lower. So it's going to be 20.26. Just had a pretty good run here if we do see that dip. Let's go into Euro on. We're looking for a pair back here anyway. We've mentioned 62.39. We're actually below that 62.39 area here. You can see that here. I would look right there, 62.05. 62, what comes in, 62.07. 62.07. Should find some decent support there. And on the upside, look at the intraday. $63.03. And boy, this Kiwi, Euro Kiwi is really slid. I mean, this is really slid. A lot of folks were looking for a big breakout, and we really trapped the new bulls. Support right now is going to be here at 73.09. And this pair just continued to weaken after breaking out. And look at this, 4 successive down days. Even going below the apex. Resistance is going to be right there. You see that? 74.46. It's resistance. We have 48.48. It's just down to 6. And with that, let's go move into the Aussie Yen. It hasn't been a whole lot. We haven't seen a whole lot of movement overall. That's what I'm saying. So we're just going through this analysis rather quickly. Same thing with the Aussie as compared with the Kiwi. We've kind of pushed these levels, and now we've got a little bit tired here. It's going to be 74.73 here on the upside. Good run, though. You can see support comes in right there, 74.05. And then let's go into the guppy. Well, we mentioned about the 41.82 and 39.95. In a sense, no changes. 39.95 is key. Can we make that stab above 41.82? Almost seems a bit of a stretch. We're going to go with 41.32 right there. And let's go into the sterling odd. Well, we're edging back a bit here on the sterling odd. You can see that here. Let's take a look here with the 2-hour chart. Resistance is going to be right there. 89, let's see. 89.46. And support right there, 87.50. There we go. We'll go and take a quick look here with some of the other markets. As I mentioned, look at Boons. Oh, wow, look at that. What did I tell you? Okay, you see how the Boons have just made this jump up in here? You see that? Now let's go to the euro. See that? New lows in euro. It looks like we're going to make it to that 11.21. You see that? New lows in euro, just as we saw a quick jump in the Bunds. You see that? Which obviously jump in Bund prices, inverse relationship, drop in yields. And this is what, this Move down is what drove the euro up. This move down in prices, which was a higher in yields, is what drove the euro up. Now you're seeing a reversal. We talked about this yesterday. I mentioned it, I believe I mentioned also in the daily roundup, is that we made new lows, but we held. And we're into a value zone. And here we are. We're seeing a jump up here in the bunds, and that's corresponding with the drop in the euro. Crude oil continues to remain under pressure. It certainly just can't seem to get what I referred to yesterday as a sustainable bid. So we're going to see what's going to happen there. Gold came off. I mean, we came right into this. I mentioned yesterday in the daily roundup. We ran right into this 1495, and I completely missed this move because I'm looking on a daily, but we rotated lower. You look at it here on the 2-hour chart. Look how we went right to that 1495 and then just summarily rolled over. So we've come in down to some trendline support. We're trying to push a little bit higher. SPOOs right here at the 3,000 area. We shall see what happens here. Other than that, that's about it. It's been a relatively quiet session. I'll go and get the bias chart out. And thanks for joining us here on the European Crossover webinar. We'll see you in the daily FX Daily Roundup.